The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour on this Thursday, December the 3rd. And great programming, and what can I say? I'm going to do my best to keep it up. And we've got the Dow down 60 at 17,669. We've got the S&P down almost 7 at 2,072. You've got the comp index down 11 at 5,112. You've got gold up 1 at 1055. Silver is down a little for 4 cents at 13.96. So all this we've got to discuss. Platinum's up 9 at 840. Copper's up at 55 at 2.03. Crude oil is up 43 at 40.37. Interesting. Bonds are down 3 whole points at 153.03. XAU is up 41 cents. The HUI is up $1.58. Gold stocks are acting much better. And this is going to be so fascinating because the dollar is down 1.46 at 98.56 by just a few cents after months and months of working its way higher. The dollar yesterday made that high, and then it pulled back just a little bit. And then today, bam, Draghi comes out, makes a statement. I'm not sure just why the market's acting quite the way it is, because they did lower the rates. I'm just wondering what Yellen is going to be able to do, because if there is competition for lower rates, raising rates doesn't make sense in the international spectrum. Now, we might be looking at it in a situation where all the Fed's requirements, home prices, probably real estate starts, and the fulfillment of that is really important to them. Looking at the inflationary aspects, looking at the auto sales, I think there's enough there for them to raise the rate. Raising a quarter of a point is just, what's the big deal? You could do that. Let me show you a chart here quickly, because I want to go back to the one we're looking at right now. This is the 30-year yield, still just making, it hasn't broken above the previous high of 31.40 that was made the week of the 13th. This is a weekly chart of November. And the 10-year note is acting quite well, but it hasn't broken above. And the 5-year is acting even better, but it still hasn't broken above either. So this is going to be just an interesting point. And I had an email. Let me just look at the time. At 10:06, I had an email from one of our Tigers to say, is this now the time? Because they wanted to buy the E-minis yesterday. I said, no, wait. No, you want to know what to do. I said, wait for a sharp sell-off. And I said to him in a return email, yes, if you have a 4-point stop. So let me just go back to where we were right here. And that was when the S&P E-minis were about 2067-ish. They're now at 274. And this is leg A. In the 10-minute chart, can it fail? Of course it can fail. But let me just show you something here. This is the E-mini. This is still the December contract. Look at the volatility index. And all this is, I have no technicals here. I'm basing it purely on the Chapman wave. The 3 patterns I talk about: straight line move, an arch, or a cup. That's all there is to the market, right? Trading it is another thing, but that's what the patterns are. Here's the volatility index, and I drew it in before. This is peak ABCD, pulls back. What's the objective in the Chapman wave? To get you to a D. Then it goes A, B, C, and a perfect D right there. The VIX goes from the 1450s all the way to the high today of 1719. And I drew this in as the platform to watch with an arch formation, and we're right there now. This is I have no indication that we've made a major top or a top of any sorts right now. Could be totally wrong, because some of the sectors are looking horrible. Got the XLE. Remember, we had a call. Was it a call or someone in the Den during my show a day ago? Was it yesterday? and want to know what to do with the XLE. And I said, the XLE, you can short right here. Oh, it was ExxonMobil. Let's see what that's doing. Yeah, I said I said, this is going to go down, and if it takes out the low of 80.46, it should test the 79.06 level. If it takes that out, you've got yourself the H pattern that I always look at as very important. That's number one. Now, let's just go back to the story, because this is sector, it's pervasive. Sector failure, sector rallies. Let me show you what I mean by that. I've spoken about the IBB so many times. Well, the IBB right now is down 274. It's made a hat. Let me move this away here. It's made what I call a hat trick top. What is a hat trick top in the Chapman Wave methodology? A hat trick top refers to a monthly move that looks like it's about to turn down, but it cannot turn down until the 120-minute chart gives a sell signal for the daily. The daily then gives a sell. This could be weeks later. Gives a sell in the weekly. The weekly then gives a sell mode signal that says the monthly is impacted. I believe that that's happened now to the IBB. That's the biotech, and it's not just technically. It's fundamentally, it's on a whole bunch of levels. That's number one. Number two is in the I've been talking about the restaurant area. Look at CMG. We once had a spectacular move when we got to CMG just before an announcement, and we were lucky that we were on the short side for the announcement, and it just plummeted 60, 70 points. I think it was 100 points altogether when we were finished. But look, it came back powerfully. I think that was way over there back in 2000. And it was that one, I think. Yeah, it was that one. Right there. I think it was April of 2014, was it? Yeah. So now what we've got is a hat trick top, peak F in Chipotle. And now you can look at Panera. Panera's come down very sharply. It's having a short-term rally, but it too looks like a 208 round number has made a high. So that's the restaurants. What about the area that I've been talking about for ages, that if you're talking about more and more automobiles and the truck sector selling incredibly well. In fact, over 18 million cars. 18 million, is that a year? I can't believe this figure. I mean, it must be like an all-time high or something, because at that level, can you imagine? It's every hour they're selling. Well, someone will do the calculation, but it's a lot. Okay, it's like who was it? Tommy was doing the baseball statistics, 10,000 a throw. Yeah, this is the same sort of thing. So what we're looking at now is AZO down about 54 cents right now. Looks like it's making that arch formation. This is the AutoZone, one of the top car truck parts companies. Doji candle high November. We're watching December real closely. Peak D in the weekly. A peak D already from 803.25 down to 746 with a big bounce to another peak D and a pullback. So I'm looking at, we have one of the auto car truck parts companies as a short, and it's pulled back quite sharply. So we're going sector by sector. But wait a minute. Look at General Electric. General Electric was hinting that we were going to have some kind of sharp sell-off. Now it's acting up 27 cents. At 30.24, and the weekly chart is really strong, and it's a weekly peak C in the Chapman wave. I can't even talk about the monthly because it broke from a low to an all-time, well, not an all-time high, I'm sorry, to a recovery high in what could be a leg A if it's not a G. G is very negative, A is very positive. I just don't know how to explain that, but it's really good. So I like what I'm seeing. I like what I'm seeing. And yes, we got taken out of one of our longs, and we're still in another long that's on the indexes. And we have shorts and we have longs. We've got a real mixed portfolio here. But the auto companies are doing really well. And let's look at AA, which I failed to buy. Good opportunity today. But it's down at 9.17 in peak C. Why is it doing so well? I don't know if this is an aberration or if this is telling us something. So now let's go through the stuff that I want to look at. The TLT. The TLT is down huge. It's down 2.86, down 2.33% at 120.01. But it's done this before. I think it's just stuck in a trading range, at least for now, because we have to watch that monthly. The monthly major upturn. You know, at some point you got to think a 30-year bull market, so 31-year bull market has to end. But as I say, I think it's stuck. I think that the rate's just kind of stuck in. But the big fear that the market has, Dow's down 2, S&P's down 1. The big fear that the market has is that when the Fed starts to implement a change in policy, when the tide changes, and I usually think that you need at least 2 or 3 focus points. You can't just use one that they've raised the rate once. You got to go 2 and then maybe 3 times. The speed of the conviction is what counts. In other words, if they raise, let's just say they raise in December, right, next week. Hey, wait a minute. What if they raise, is it 2 weeks time? Whatever it is. And on the 15th, what if in February they raise again? What happens in March or April, they raise again? That's serious stuff. But boy, competition? Let me just have a look at this. Competition? I think that they're just kind of stuck. Even if they, I don't know, even if they raise the rate, I'm not sure that that is what's going to tank the market. And not only that, you know, Marty Zweig always used to say it's not the first rate, it's after that, and that you've got a good period of time. The market takes it in its stride, and then the market takes it very seriously. So who knows? All right, let's just have a look at our little chart here because we want to see that. So yeah, the VIX broke its support level. It's now only up 45 cents at 1636, and the E-mini is in leg A. So I hope our Tiger managed to get that position, because even now all he has to do is put in a stop, and he's got a no-lose situation. Peak in the den. Basil, you own a pickup truck? Nope, I've never owned a pickup truck. There were times when I used to have a 2-family where I thought I needed a pickup truck, but no, I don't. And so let's get back to our story. We're on the yes, with the tennis racket in the back window. That tennis racket, my 2 tennis rackets are just safely next to me. Now this is going to be something. Oh, we got Ilka. We got Ilka in Boston. Ilka, how are you?
Yeah, so I'm wonderful. How are you?
I'm good.
I'm back from Europe. I was gone for a month, and
we missed you.
It was wonderful. I had the best trip I've had in the longest time.
So
Europe is just a beautiful place.
You know, I see this guy, Steve, whatever his name is. He has
yes,
he has that show on NPR. It's this travel show at 11, and we get it here at 7:30 or something in the evening. And I just see these beautiful things. I still want to do Italy. I want to do the I want to go to the lower part. I want to see the sharp cliffs and the ocean.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. Dow's down 9. S&P's down 3. Wow, what an interesting session this is going to be. What a close it's going to be, whatever it does. So we've got Ilka in Boston, and we're about to talk about... first let me make 2 corrections. One is it's not Steve, it's Rick Steves. I know.
Yes,
I always think
I was going to say. Yeah.
I always think that people have the same a first name that could be a last name, and a last name that could be a first name. They must have interesting lives. I mean, it's just a fascinating thing.
And we just actually returned. We went to Rome, so.
I got my good friend is in Rome right now. Here they get spending about 8 weeks there. Oh, they love it. So
it's
yes,
just unbelievable. But anyways, so listen. So I'm very excited because I'm back and I can trade now. And
good.
But I have a question for you.
Question away. Uh-oh.
So
the tone of voice told me I'm in trouble. Yes. What?
No, because see, a month away actually gave me more ideas. So I have an idea that I think it's not very clear.
Yeah, but Ilka, a month away, it's exactly where you left. The Dow is in exactly the same range right now. Right?
Correct.
Okay.
I missed nothing, so it provided me with some thought. Although I knew that I had a feeling the market is on a higher, it has higher ups. But listen, so Chapman Wave.
Yes.
Is there a way? Because I don't think I've ever discussed that with you through all my training with you. Do you have specifications for peaks, individual peaks? So what I mean by, is there a specific trend that you recognize A versus A minus? Meaning, how long do I wait on an A for it to be able to give it A minus, or it's not the time, but it's the level of price? And then do you, in your Elliott wave, Chapman wave gave enough? Do you have description for specific peaks? Meaning, do you know what I mean? Like there's certain behavior in peak C that I've recognized in Chapman wave.
Yes.
But do you have for specific, or not really? I mean, I just thought about it.
Let me answer it this way here, because I'd much rather have people looking at an example than just talking about it, you and I, because my eyes glaze over, everybody's eyes glaze over. If you see a picture, you got a picture. I've got a gray peak A at 17,914 on the Dow. That was on the 20th of November. Why is it gray? Because it is under the 17,977 November 3rd high of peak F. Yeah, it could be a G, but nothing about it says that it should be a G, because the stochastic has been rallying. It's above 80%. It is still holding very well. The MACD has been declining, and this is the first hint right now that there's a lot of resistance. So if there was a move at this point above 17,914, I would call that B at this point with the Dow. Now, to go with that, this is very interesting. Why? Because in the Dow Diamonds, yesterday, we went to the B. Now, here's the big question, and this is a question that I don't want to ignore, which is one of the reasons why I put stops in place for our positions, because regardless of what the weekly chart is looking like, and the weekly chart of the Dow Diamonds, as the MACD is still expanding very strongly, the stochastic is at 90.23. That is really strong, holding steady as a rock. And the 9-period moving average is down at 175.14, and you're at 177.16. So that weekly chart, the tide, I like to call it, is still looking very strong. And it suggests that the noise, and that's really what we've been looking at for the last month while you were away, we were looking at, if you had to think of it as an electrical pulse, you're just having this vibration between, oscillation between a certain border, but you haven't really broken out. Today was the very first time we broke the support level, but we've already bounced right back into it. And the day is young, but that's the way we're looking at it. So now let me answer the question. It is the context. If I'm looking at this B, but I've called it a gray B in the daily chart of the diamonds, and I had made a perfect peak G at 179.75 on the 4th of November, plunging all the way down to 172. That's 7 points. That's 4 or 5%. Then I have to consider that this is subordinate to the left side peak, because that's why I call it a gray A. I have not yet a gray B. I have not yet got a confirmation, because the MACD hasn't crossed positive, that this is a buy mode, although everything else about it suggests that there should be higher prices to come. So it is the context within what we're looking at. Now, I have put in, now this will answer your question in another way. I have put in an up arrow, and you know, for me, an up arrow implies always that I'm expecting a peak A, B, C, and D. That's the buy mode of the Chapman wave. And I've got an up arrow because the stochastic's at 90% in the weekly, and the MACD is still expanding. So you want to hold on a moment and we go on?
Yes.
Okay.
Yes.
We'll be back straight after this. We're talking with Ilke in Boston, and I will be back. Amalfi Coast is really what I was thinking of when I was talking about it.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back, and we're with Ilke in Boston. Ilke, if you give me 1 second, I'm just going to run through a couple of charts. I had a number of questions during the break, email questions and other questions. So they're going to also partially answer the questions. So let me do this. I'm going to just, if you don't mind, I'm going to go the IYT, question about the IYT, and that is, let's see, Adam wanted to know, got to get the different mouse. Give me 1 second here. Yeah, just about it. So you'll see that there was a peak D in the daily chart back in, right here. Back on the 17th of September, it went 4 peaks higher and then pulled back sharply, and then started another buy mode and went to A, B, C, D, pulled back sharply, and then there was an A, a little doji A. Now that doji A at that particular point right there had the MACD rallying, stochastic running, but under 80%. So the question would be, in your case, is this like a new buy mode, a buy signal? What would constitute it? Well, what would constitute it is I would need to see the stochastic start to go above 80%, the MACD expand, and I would definitely want to see a leg B. And I definitely have to go above the previous high. And then I have the question, is that now an E/B or whatever it is? But the fact that the stochastic flattened out and the stochastic then immediately turned down under 80% made it look like that arch formation. The transport. See, one of the reasons why I don't mind being stopped out of our long positions now is I'm going to let the market tell us what to do. I might be thinking the weekly chart is very strong, but the daily is the rudder. And if the daily starts to, in other words, if the Dow at 6690 right now goes to 17,550, all of a sudden, all the positives in the shorter term are going to be pretty negative, and the weekly chart will just start to show a little crack in its positives. But you've got to look at the rudder, and the rudder is saying, be careful, the shorter term is trending down. Now, I've got the IYT at a very critical level, because if it breaks the left side low of 142.54, that suggests you've got a larger arch formation. The technicals are very weak, and that'll impact the weekly chart, where I've already drawn in the arch once, and I'm just showing that there it is. And I'm expecting it to fail, and I'm expecting that the 9-period moving average in the monthly it's going to have a tough time piercing that, and it's under it right now. So that's a key indicator to say that the transports are negative. Next question I had was AXP, and you'll see almost the same thing here. AXP is American Express. Spoke about it recently. That it also made a whole bunch of peak A's. Look at this one here. This is an A, right? Yep, that's an A, and that becomes an A minus, and that was right on the 7th of October. Yet the MACD was acting beautifully. The stochastic was acting beautifully. It went sideways and then broke the support, and then after that you had another A minus. So the whole thing about the Chapman wave, looking for buy modes, is that you need, as you know, you need to get the stochastic to turn up. You need, at the same time, a good candle for the price. Then you need the stochastic to go above 20%. That concludes the sequence for the stochastic. But you've got to have price movement. Then you've got to have at least a strong A, or at least B crossing A strongly, with the MACD crossing positive, to get the chance of a buy mode. And here you are. You've got these arch failures. And you know that H pattern is deadly when you start to take out the left side low. Another question, then I'll just do this, and then we can go back to our story here, is XIN, what was that? XNG, natural gas. Oops, I typed it right there. Natural gas has exactly the same thing, that it's got this XNG. X is now an index for that. And it's just failed. It made that arch formation in the weekly and failed. There's that peak A, and then it became a peak A minus. So your question really pertains, I think, to where would I feel comfortable saying that the A is strong enough to go to a B, and that B is strong enough to go from a buy signal to a buy mode, or is this just what I call buy signal failures? That's kind of part of your question, right?
Correct.
Okay. So the buy mode is when we have those four contingencies. Price and stochastic. Price has a nice candle from off a low, and you have to make a V shape. You have to have a higher low before you can even consider it to be a trough. Then you've got to have at the same time, stochastic has to be crossing positive, and then stochastic has to go to 20% with price movement, and then the MACD has to cross positive. And if that happens and sustains, the stochastic over 80% is really your best. That's your best bet for a sustained move, and that hasn't happened in the natural gas the index. And one other question I had, which I thought pertained to what we're looking at. Let's go to the XLF, because this is exactly where you could be having rally failures. So in the XLF, that's the financial S&P, went to 2497 on November the 6th, peak E, pull back very sharply to 2380, rally up to an A, I call it a gray A, pull back, hold the 9-period moving average, have a good candle, and then you break out and you go to B, but it's still gray B because it has not broken above the left side high. And look at the MACD. The MACD hasn't crossed positive. Stochastic is holding well. So it says you've got a couple of parts of the puzzle that are negative, one part that is positive, and that's the stochastic. Then I have to look at the next time frame, and that month, the weekly chart is still very strong in the XLF. It won't be if the XLF starts to close on a weekly basis below 2350. It's only a point lower than where we are. But right now it's holding quite nicely. So I have to go step by step, and your question really should pertain to my monthly charts. Is this a brand new leg A, possibly peak A, but let's call it leg A, in the monthly chart of the XLF? Is this in the Dow? Let's just go to Dow Diamonds. In the Dow Diamonds, is this leg A? Is this a brand new A with B, C, and D still to come? That's what I'm going to be talking about a week from tonight in my webinar on the relationship of the Elliott Wave 5. That's usually the strongest move to the upside, and what would happen in the Chapman wave if we actually broke to new highs? Is there time? Does this mean that we can still rally into May of next year, May, June, July? I'm putting it together with a whole bunch of things. Peter in London just sent me a fabulous thing on Giga, the Giga moves. This is bigger than Mega. This is Giga. We've got Giga airplanes, Giga bridges. This is a period that I've been talking about for years, decades actually, and we're coming into it right now. This is coming here 2016 into 17 and 18, and in my newsletter I showed what is it, Jeddah, the new tower, Saudi Arabia, planning for 2017-18. I show New York, Manhattan, with the 50 new buildings over 700 feet. This is an incredible period. This is a very important period. So, what didn't we answer?
So there's one more question. You have told me there is 4 things you look for, but what about your 9 EMA? How important in that bunch, the price for peak A? I would like to just stay with peak A because A has so much, before I go to B and C and D. So is that, how important is that in your pile?
The 9-period exponential moving average, for my work, this could be different for everybody. And what I recommend with people is use a moving average that you're comfortable with, one that fits your criteria. For me, a 9-period moving average is the shorter term look at the market to say, are we holding above or below the 9-period moving average? And in this case, the Dow Diamonds were above it yesterday. Then at the end of the day, they were below it. This is the second day. It's actually, if we close under it, which probably is going to be the case, that'll be the third session out of 4 that we've closed under the 9 EMA. That makes the next, let me put it this way, that makes the level of 176 in the diamonds very important. In the Dow, it'll be probably just a little under that. It'll be 17,560, I'd like to say, to give it a little room. A break under that says, oh man, you're looking at an definite arch formation. It doesn't matter if it's going to impact the weekly. You've got to look at the daily as saying, now we're going to have to look for lower levels. Then you can go all the way to the 174s and 173.82 is the 200-period moving average. So out of the moving averages, the 9, the short, and the 200, the longer, are really important. Look at the way the diamonds held the 200-period moving average back in the week of August the 24th. There was a move below it. They went to 150, and yet it closed. This is where it opened. It opened at 155.90, and that was right on the 200-period moving average, and then it closed much higher. So I consider those probably two of the most important moving averages that I look for, and they are exponential. The reason why I use the exponential is because they put the most weight on the last price.
Thank you very, very much.
So I hope that helped you, and I will be giving a talk over at MIT on Wednesday night.
Oh, this Wednesday?
This coming Wednesday at the Boston Investors Group meetup.
Oh, okay. Very good. I will see how my schedule is. I'd love to see you.
Good. All right.
Okay.
Well, thank you so much for calling, and I always appreciate it. Have a good day.
Thank you for your knowledge. Thank you for sharing.
Thank you. Okay.
Bye.
Good. So, folks, let's just go into this now. What we need to do is just to quickly go to this chart that I showed you before. You see, we were talking to Ilka about these A's. This A here in the 10-minute E-mini held that trend line beautifully. Now, when there is news, aberrational news, as we had this morning, what we have to look at is how does it impact, how does the market receive the news? That's really important. And if you're looking at the GLD, it's up 63 cents at 101.33. It should be, if gold is really going to take off, it should be much higher. At this point, it should be up $1.50 to maybe even $2 if that's the way it was being impacted, right? I'm not putting down the move that it's up right now. I'm just saying that to my eye, it should be much higher. But I'm also looking at some of the gold stocks, and those gold stocks are holding very well. And they are saying there's something else going on that we cannot ignore. Now, the real issue is this. That A- that failed because of the news, and we went straight down on the Draghi report, and they are lowering the rates a little bit. And the euro just skyrocketed. I don't know where it is now, but let me just see euro. Oh, now it's up 0.029. That's the euro itself. That failed. And then there was another strong spike to the upside. It went to an A- again because it failed, took out the left side low. Then we went to a trough D. That trough D had another big move to the upside, went all the way from, can you believe it, went from 2065.25 to spike to the 2076.50 level. That is huge. Now it's back down at 2068. And what we're now going to see, and this will go into the close, because now we've had the rally, the failure, the rally, the failure, the rally. And if this is a failure, this will say that the bulls will become very disheartened and not put any bids. That's number one. Number two is the shorts will start to accelerate their push. They'll say, hey, we've got to stop down, we've got to stop down, but now we're in and we're going to stay in, and this is going to, and that's going to be the test going in to the last hour and a half. Usually I'd say the last hour, but there's the last hour and a half. Why? Because if you look at the VIX index, the VIX index came all the way, it broke that low, held support, didn't take out the low of the left side at 12:01 that was on the first, 20 past 10 of 1634. It held it, and now it's bouncing. So I would normally do this. I just grab this and say, V-shaped pattern. Yeah, maybe a V-shaped pattern, but I'd be inclined to say we're fighting two trends. One is the arch, and now you've got a V-shaped potential right here. But I'm thinking that the real test comes for the market if the Dow holds 16,660s. No, I'd have to say 16,665. That's really the level. And the S&P can hold the 2070 level and start to rally. One more rally, and then all of a sudden you've got the bulls and the bears saying, I'm kind of done. Let the market do whatever it's going to do. And that's going to be very important for the close today. Now, something that I'm not prepared to dismiss at all. I know that I've spoken about the Japanization of our bonds. So I'm going to talk about that in a moment. I'm going to first go to our caller, Jerry in the Back Bay. Hi, Jerry. How are you? Jerry, are you there?
Yes, I am. Do you hear me?
Yes, certainly can, loud and clear. Yes.
Yeah, I'm interested in shorting the euro. I've been patiently waiting for it to catch a sharp rebound because there's such an extreme positioning against the euro. And I think that this is happening right now. Yesterday, I was at a seminar with bankers from Europe and the U.S. and Japan.
Yep.
And they were forecasting that Draghi, would cut the rate.
Hey, I think we're about. Hold on, Jerry. I don't want you to be in the middle of a sentence, be taken off. I want to hear all about it. We'll be back with you straight after this break. Dow's down 54.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN.
Hi, folks. We're back with Jay. But just for 1 second, I was asked if I would, and I know we're going to run out of time, Jerry, because you've got something very important to tell us. So I'm going to say just that the VIX index right now is at 16.89. It's up 0.98. If the volatility index...
We can do it tomorrow.
No, let me just get 1 second. If the volatility index goes above 17.30, this market will go back to the lows and go even lower. If by chance, by 2 o'clock, 2:15, it's pulling back and it's at 1650 or lower, then this market can at least have a pretty decent close, so it doesn't close down 55, but the Dow closes down 25. All right, Jerry, fire away.
Yeah, I was in a meeting yesterday with a bunch of bankers from New York, fancy from Japan and Europe and the U.S., and they were like forecasting, that the Draghi would cut the rate 25 basis points. He would raise QE per month by $15 billion, and he would extend the QE indefinitely. And because he's been promising he'll do whatever it takes at meeting after meeting. And so instead, he only cut the rate by 0.10, and then he did not increase the amount, and he set a limit that they will extend it until spring of 2017. So it was like a big disappointment to the Europeans.
Right.
So you had an overextended euro, but still, in the long term, so I do things more on months instead of days.
Right.
And you're going to be printing 60 billion euros a month in nothing in the U.S., and our rates are higher than theirs. Would you rather buy a U.S. 10-year at 2.2, or would you rather buy a German Bund at 0.48?
Jerry, wouldn't you be thinking that if our rates, let me put it this way, if our rates are higher, that the competition to want to buy our rates would push the rates down?
Yeah, it'll hold them down.
Yeah, so I don't know how.
They'll be, but we're so far ahead. Our 10-year is 2.2.
Right.
The German 10-year is 0.48.
Right. So that's my point, that money would want to come here because of the rate. But in
so
fact,
the euro is going to go down, right?
Right. So, okay, I'm in agreement with you. So this is what I would do. I would normally say right here is a place to do it because I think this was just an emotional reaction. But because you're looking out further, I'd give it a day, give it tomorrow, maybe even until Monday, because I just want to see if there's a little bit more of an upside burst, because I'm going to be watching gold at the same time and the gold stocks. I need to give it a day or so. If you were a short-term trader, I'd say, you know what, you can do it today or tomorrow. I agree with you. It's going to be pulling back. But I think you're looking at the bigger picture. So missing a little bit here is not a big deal. Hold off. I'll talk about it tomorrow. If you want to just drop me an email to remind me, but I'll talk about it tomorrow.
Bye.
Thank you very much for calling. Always appreciate it. Jerry in Boston. And folks, the Dow's now down 47. We're going to be watching this real closely. I still see just enough buying in this market to move slightly high. It's next week that I think we got to watch out for. That's next week, somewhere between next week and the following week. That's when I think we make some kind of... I'll be talking about that in my webinar. Go to the front page of TFNN. Let me get this right now. TFNN right there. Front page of TFNN, you'll see Elliott Wave 5 and the Chapman Wave. I'm putting it all together with the socioeconomic, a whole bunch of things. This is such an incredible period. This is very important because I think if we can pinpoint the levels to look at and how to try to plan next year and start it off in December, I think you got a little a head start there. And don't forget, with the Tiger, you get Tiger dollars with all this stuff. This is free. You get my newsletter for free. It's a week from today. Check it out, front page. But also, please read about the Salvation Army and the Tiger dollar sale. It's a great amalgam of things. Please, Tiger Dollar Holiday Special. Every purchase leads to a donation to the Salvation Army and a tax deduction. What more could you want? I'll be back tomorrow. Have a great day.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.